Welcome to the Power and Market Report. I'm Albert Liu. Happy to be joined today by Brien Lundin. He is the editor of the Gold Newsletter and CEO of the New Orleans Investment Conference. Brien, welcome to the Power and Market Report. It's great to have you here for the first time. How are you?
I'm doing great. Great to be with you, Albert.
So I have the editor of the Gold Newsletter on. I definitely have to talk about gold, especially with what's been going on over the last month or so. But before that, I just want to mention that you are hosting the New Orleans Investment Conference this month, October 25th through 28th. This is a conference that many people look forward to, and it has an enviable history. And so for anyone who doesn't know about this conference, can you go back and just tell us a little bit about the history of the conference and what makes it special?
Sure. The man who started it all was my mentor in the industry, Jim Blanchard, and he's a well-known gold icon, known widely and as the original gold bug. In fact, in 1971, when Richard Nixon closed the gold window and made convertibility of dollars into gold illegal from a foreign exchange standpoint, Jim knew that this would then allow the government to spend without restraint, to create, build up government debt, to create inflationary pressures, et cetera. So at the time, it was illegal for American citizens to actually own gold bullion. You could own gold jewelry, you could own collectible coins, but you couldn't own gold bullion. In effect, you could not protect yourself from the inflationary consequences. So Jim set about to campaign, to advocate for the legalization of gold ownership. To do this, he started Gold Newsletter, literally on that date, 1971, over his kitchen table. After about 3 years of some concerted and sometimes crazy efforts to lobby for the legalization of gold, they were successful. Jim and a number of other people like Jim Dines and other people at the time were successful. Gold was legalized the last day of 1974, and knowing that it was going to be legalized, Jim decided to have an investment conference to bring people together, to explain to them, to look at the gold market and really just teach U.S. investors all about gold and how to invest in it. He had that conference in the spring of 1974, and it's been going strong ever since. It was the first retail investment event, first retail investor conference of any kind. And although we cover all the markets, and we've had a long legacy of covering geopolitics as well as economics and all of the asset classes, we do have a long-standing focus on gold, precious metals, free markets, the philosophy of personal liberty, and mining stocks, which leverage, of course, the moves in the precious metals.
You've had some notable speakers over the years, Brien. Can you just summarize some of the most memorable ones?
Oh yeah, it's really a fantastic legacy that Jim passed on, and we've tried to continue it. We've featured Ayn Rand in her last public appearance before she passed away, Margaret Thatcher, Barry Goldwater. The list goes on and on. It's just about every giant of economic history or conservative / libertarian political philosophy of the last 5 decades has graced our stage. And also all of the top experts in virtually every asset class, but especially precious metals.
Right, and you have a tremendous roster for this year as well. You know, you mentioned what an impact that sort of the banning of private ownership of gold and then the reversal of that has had. I know that impacted Ray Dalio a lot, just watching what happened throughout those events. And I think that, you know, this conference was very necessary for a population that had seen gold pegged, or rather the dollar pegged, however you want to look at it, to gold for all those decades. And then all of a sudden you have something that is basically free floating. People will, I guess some people will argue that even still there's manipulation and to some extent price fixing, but the price of gold is anything but fixed now. It's moving all over the place. We've seen over the last decade or so tremendous moves in gold. And so let's talk about what's going on recently. The headlines this week for gold drops from around $13.50 to near $12.70. This happens in about a period of about 30 days. The headlines out of Bloomberg and a lot of other networks is that this is the worst run for gold, weekly run for gold in a very long time. So what do you see happening in the gold space right now? Why the price correction?
Well, there are a lot of factors moving gold this year. There are geopolitical factors, which I think are largely a non-event. They come and go. They blow like the wind. Of course, in the era of Donald Trump, instead of periodic waves crashing on the shore, we have more of a rising tide of concern around the world. I do think that's been supportive of gold to some extent. But if you look over the last year or even the past couple of years, you see that gold and the dollar have followed a very close inverse correlation. They've traded on opposite ends of the seesaw very closely. Now, of course, you naturally expect that to some extent because gold is priced in dollars. But over the last couple of years, we've seen that relationship follow very closely. So what you have to look for to see what's driving gold is to look for what's driving the dollar. This year, we had the dollar drop from a peak of around 103, the dollar index, that is, to the low 90s, a really precipitous drop for any currency, especially the world's reserve currency. And I think that was largely driven by skepticism over the Fed's ability to continue their campaign of rate hikes as planned, that they could not be as aggressive as they would have liked to have been. And I think that's borne true largely. Over the past month or so, we've seen the dollar perform kind of a counter trend rally, and gold followed that by dropping as the dollar goes up. The gold has fallen, and I think that's been to the result of primarily the Fed coming out and voicing their expectations of a December rate hike. Once again, a last-minute end-of-the-year rate hike like they did in 2015 and 2016. Going into that December rate hike, I think gold's going to be in a very good place, whether it rises, falls, or trades sideways in the meantime. These end-of-year rate hikes have been very good for gold in that they've released this short trading pressure on the metal and have served as really the launching pads for multi-month, very powerful rallies into the new year. I think that's going to work out for gold regardless. If the Fed doesn't hike rates in December for some reason, that's going to be a very dovish signal to the markets and a bullish signal for gold. So either way, I think gold's going to bounce off of that December meeting. What it does in the meantime, frankly, is up to a lot of things: market sentiment, the latest economic data, and frankly, geopolitical issues.
Yeah, I tend to agree, Brien. I think throughout the year, the Fed has been jawboning, but it looked like their promises had not been priced into the market, especially the price of gold. But the thing is, for some reason, as we get closer, it seems like some of those promises are being priced in. It's you hear the Goldilocks talk again, that perhaps everything is lining up for recovery or continued recovery. I'm guessing that you don't buy that narrative.
Well, I think that if you look at the longer term this year, if you look at the drop in the dollar, the market was telling us something at that point, and it wasn't overt. The markets are predictive machines, and they look ahead. And it's not any one person predicting the future; it's the cumulative expectations or worries or concerns or of all the investors out there. And I think that kind of cumulative psyche of the world's investors were looking at the U.S. economy and looking at this kind of orchestrated growth around the world and seeing that a hiccup is very likely. And in particular, in the U.S., there were some signs of potential weakness that we've seen in the data. I mean, as we talk this morning, we just saw the jobs data come in with a 33,000 job loss, which was a huge downside expectation, and the markets are chalking that up to the hurricane. I think rightly so, but I do believe that in those numbers there are some inflationary indications that traders are viewing right now as bearish for gold because they can't see past the Fed's next rate move. Inflationary expectations will actually be viewed as bullish for gold eventually. So I think that creates these kinds of disconnects in the market, especially the trading mentality that's out there, create buying opportunities for those who can see a little further down the road.
Yeah, I tend to agree with you. Long run, it's hard to get around that point. But in the near term, it seems like people are focusing on other things. Very highly respected people think the markets, the equity markets, are sort of near where they should be. And I think the fact that people are still talking about tax cuts maybe is giving some people some hope going forward that the markets not only are fairly priced, but actually have a reason to maybe fuel forward in 2018. What are your thoughts on that, the tax cuts and what the effect would be on broader markets?
Well, by virtually every measure, the valuations in the stock market have reached the peaks that they last reached around 2000 in the tech stock boom. All the measures of valuation are either there, close to it, or exceeding where they were in 2000. So the market is overvalued and once again priced for perfection as they were in 2000. So if we do not get tax cuts, then I think the market's in for a big surprise, and we could see dramatic shift in allocations toward the precious metals, out of equities toward the precious metals, particularly gold. If in fact there are tax cuts, and if we do have this tax reform, then once again I think you'll see to a large degree traders following the buy the rumors, sell the news. It's already priced into this market. So if it's a fait accompli, where does the market go from there? And I think you'll see some money taken out of equities when that happens, if that happens.
If it comes out of equities, Brien, where does it go? Does it go to bonds or does it go elsewhere to alternatives?
Well, if it goes into bonds, if there's real concern, if there's a liquidity trap, then it does go into bonds. Otherwise, it depends on what the perception is of the Fed's moves. If the Fed looks like it's going to lower rates, if there's enough of an economic jolt that it looks like the Fed will have to stop its campaign of tightening and perhaps turn back to looser monetary policies, then the whole table gets shifted and rates go down and bonds could rise in that environment, that scenario. And I think that in effect is bullish for gold. You know, Albert, if you look at some of the primary tracks, the two forks in the road, as it were, that the U.S. economy can take, either toward growth or a deceleration in growth, there's an argument along either path that will have economic dislocations and will have a bullish scenario for precious metals. So I really think that we're on the verge of a new era, whether it's like we've seen in the past as explosive on the upside or whether it's a slow, steady gain. I think there's real opportunity in metals and mining stocks right now.
One thing that you could reasonably expect would actually put gold and gold stocks on fire would be a reversal of interest rate policy. How far do you think the Fed will raise short-term rates before they feel that they have to turn around?
Well, I can tell you how far they won't go. They won't go over 2.5%. And that's one of the things I've been writing about in Gold Newsletter lately. It's really amazing that the Fed governors and regional presidents and FOMC members have come out, a number of them in recent weeks, and said that they look at the new normal for interest rates. They look at the terminal level for the Fed funds rate at about 2.5% now. That's down from about 3.5% when they first started talking about tightening. So they're looking at 2.5% Fed funds rate, and they're hoping for and driving toward a 2% inflation rate. That means the Fed is telling us essentially to buy precious metals because real rates will be 0.5% or lower or potentially negative, and that's where they want to be. That's really where they want to be. They want to have ultra low interest rates going forward as far as the eye can see. And in actuality, with the debt in the U.S. as large as it is, we can never see, we used to be normal interest rates again. We'll never see 4%, 5%, 6% interest rates again because the debt service costs would destroy the federal budget. So we are in a low to ultra low interest rate environment until we see some sort of massive restructuring of the whole financial system, which I hope we don't see, frankly.
Brien, if they're driving towards 2.5%, they're driving kind of like the old man in the fast lane on the highway, just taking their time. They tend to want to draw these things out as long as possible. That's what we saw before with Bernanke and with Yellen. So do we get the hike in December? And beyond that, what do we get in 2018?
I think we do see the hike in December. With that said, I wouldn't be surprised if we do not. There's some really smart people like James Rickards out there who are saying they won't hike in December. I think it's a coin toss right now. I think the inflationary signs we saw in the latest jobs number are arguing that they probably will hike in December. Their real motivation, Albert, is to get as much room above zero, to get as much room to cut when the inevitable recession comes. And I'm not going to predict when that comes. You never know. You really don't. We could be in a recession now and not know it. The way they look backward and pinpoint the starts of these things. But yeah, I think they'll probably raise in December. And as I said, I think that will likely be a launching point for gold. We typically see a weak first quarter. So no matter what they do, I think if they say they're going to raise rates 4 times next year, as they did this year, they won't be able to do it. And their upside is 2.5% in any case. So we will have low to negative real rates going forward.
All right, Brien, we have to leave it there, but I want to let the viewers know that your conference is coming up later this month. The website is neworleansconference.com. Sprott is going to be there in a big way. Rick Rule is going to be speaking, and he's going to be there with a team from our office to answer any of your questions. So I highly encourage you to get out there and speak to Rick Rule in person. He's happy. He really enjoys speaking with the investors and followers on what his latest thinking is. So please do that. And Brien, before I let you go, who else is going to be at this conference?
Well, as you know, we cover a lot of geopolitical and economic issues, so we have some of those commentators that are very popular right now. We have Tucker Carlson, Charles Krauthammer. We have Robert Kiyosaki, who's a very popular wealth creation guru. We have Jonah Goldberg. We have Judy Shelton, who I think is likely to be one of Trump's nominees for the Federal Reserve and a real gold advocate. We have Doug Casey. We have Peter Schiff. We have Rick, of course, as well as virtually all of the top analysts in precious metals and mining shares. And, if Rick Rule is bullish, as he is right now, on the opportunity in junior mining shares, people need to take notice because he's best at timing these markets, the best I've ever seen at timing the cycles in these markets. And he, like I, feel like we're in a real opportunity right now. On the upswing of these markets where tremendous gains can be made if you're in the right companies and you time your purchases well. And New Orleans is the best place to find these opportunities. It's been proven well over 4 decades.
All right. My guest has been Brien Lundin. Brien, how can people get in touch with you? I know you're on Twitter. Where can people find you?
Twitter is literally Brien Lundin, BrienLundin. I'm on Facebook, where we have Gold Newsletter is on Facebook. The New Orleans Conference is on Facebook. And our web address for the New Orleans Conference is, as you said, neworleansconference.com. And Gold Newsletter is simply goldnewsletter.com. And we have a free report on both of those sites that's available that's called The Investor's Guide to Gold and Silver.
All right, we'll leave it at that. Brien Lundin, thank you very much for spending time with me, and look forward to talking to you again.
Thank you, Albert.